Whole life insurance versus term life insurance. What is the safest and most cost-effective option for your family, and what's the difference? Let's dive in. Whole life versus term life. These are the two major types of life insurance that exist, and there's always a lot of confusion between the two of them for the younger generation that starts to look into life insurance for the first time. Now, which of these options is going to be the most cost-effective and the safest for you and your family? Well, let's discuss starting with some basics. First off, what is life insurance? Life insurance is insurance that you purchase so that if you were to ever pass away unexpectedly, that you would be able to leave money to your loved ones. Typically, this is a spouse or children. Again, any life insurance policy is built so that the person that takes it out or the person that is insured by that life insurance policy, they pay a monthly premium or quarterly, annually, however, and if that person is to pass away, money is left behind for the loved ones that they leave behind. Now, there are two main types of life insurance that exist. There's whole life insurance and there's term life insurance. Well, what's the difference? Let's start with whole life insurance. Whole life insurance is built to last your whole life. No matter how long you live, whether you pass away tomorrow or pass away at age 120, the whole life insurance stays in force. So that no matter what age you pass away, your beneficiaries or your loved ones are left money on your behalf. Now, whole life insurance, to keep this simple, is usually very expensive because whole life insurance is kind of like a large savings account. The amount of money that you want to leave behind in this policy, let's use the example of $100,000. Okay, if you buy a whole life policy that would leave behind $100,000 to a loved one, well, in essence, they're going to want you to give them about $100,000 worth of premium before you pass away. In essence, it's a large savings account. You give the insurance company about $100,000, and when you pass away, they give it back. I know what you may be thinking. Why would anybody do that, right? For some clientele, we have the same question. Why would you do that? It's just a large savings account that you don't have access to in case of an emergency. Yes, some life insurance policies offer a policy loan that you can take out against the policy if you need money, but you shouldn't be taking out a loan and paying interest on money that's your own, okay? So this whole life insurance policy has a few advantages. One of the biggest advantages of these life insurance policies is that the person you do leave the money to gets that money tax-free. That is a big advantage, meaning if you pass away, the person who gets the money that is passed down to them gets it tax-free. They don't have to put it on their tax return and pay a bunch of taxes on it. They don't have to pay any tax on getting it, which is definitely a major advantage. Where a lot of people think that this is a big deal is that there won't be any estate tax or inheritance tax when it's passed down. Well, the good news is that at least here in New Jersey and in a multitude of states, as long as the amount passed down is less than $13 million, there really isn't any estate tax to worry about. But there's always income tax to worry about. So when it comes to whole life policies, if you're extremely rich and you want to leave behind $20 million to your children, you could put it into a whole life policy if they let you write it for that much money and pass it down to your kids, and they won't pay any taxes on it. They won't show $20 million worth of income to pay taxes on. But if you're just your average individual, a whole life insurance policy may not be the best option for you. You might as well open up a high yield savings account and hold that money on your own, okay? So to summarize, a whole life insurance policy is basically a large savings account. You give the insurance company about as much money as they're going to give you back. You can pass away at any time, whether it's today, tomorrow, or 50 years from now, and they're going to pay out that money to your family no matter what. There's no limit or expiration on it. Now, these whole life policies are often then compared to their counterpart, which is a term life policy. Now, what is a term life policy? A term life policy is a life insurance policy, meaning you pay into it, and if you pass away, they pay out your beneficiaries or your loved one an amount of money, but the term life policy only lasts for a period of time. Typically, that might be 10 years, 20 years, or 30 years. Now, the first question most people have is, why would I buy life insurance that's not going to last my whole life? Well, you may not need to pass money along to your loved ones if something were to go wrong for your entire life. For example, a term life policy is built for those younger couples that maybe have a mortgage or a new child. If a young couple has just bought a house and they're affording the mortgage together, if one of them were to pass away, Well, the remaining spouse might not be able to afford that mortgage. So a term life policy would come into play so that if one spouse passed away, the other spouse was left a large chunk of money to pay the other share of the mortgage or to even pay off the house so that that person can afford to live on a single income. Now, why is term so advantageous besides the time period factor, which we'll get back into in a moment? It's that term is so much cheaper than whole life. A whole life policy might cost $400 a month for the same amount of benefit, say $100,000 hypothetically, that a term life policy would only cost $40 a month for. Term life policies are so much cheaper because the insurance company really doesn't expect you to pass away. They won't offer you the policy if they expect you to pass away. As I haven't gotten into yet, but I'll make a quick note on now, all life insurance policies require something called underwriting, which means they've got to check your health and see if they're willing to accept you or not. If you are very sick, they may not take you for coverage whatsoever on the term life insurance side or even on the whole life insurance side for large policies. So back to our term life focus, these term life policies are very inexpensive, meaning you could get a large amount of coverage, maybe $100,000, $500,000, $1 million worth of coverage for a relatively small amount that you pay monthly, so that in case of an emergency, in case you passed away unexpectedly, money is left behind to your loved ones to continue to sustain the lifestyle that you had built together. For example, if you have a spouse and you have a brand new child, or you have a multitude of children, if the spouse is left alone because you have passed away, how are they going to continue to work and take care of the children? How are they going to afford the lifestyle that you've provided for the children on only one income instead of the dual income that the family is adjusted to? This purpose of term life insurance is to build out a period of time that if one spouse were to pass away, the other spouse could continue to live a normal life without straining themselves financially or putting their entire financial situation in jeopardy. So for a young couple, for somebody who just bought a house, for somebody who has children, or for somebody that has a lot of debt together in a relationship, those are the people that a term life insurance policy is perfect for. If you passing away were to put serious financial burden on your spouse or your remaining loved ones, then a term policy can solve that so that just in case you passed away for any reason, they were left with enough money to make their lives easy. Again, if your spouse were to get extremely sick, maybe you spent the last couple months of their life by their bedside. Maybe you lost your house in the process of losing your job to stay by your spouse's side while they were passing away. Well, a life insurance policy could then reimburse you for all of those losses and let you get back on your feet without having to rush back to work after the loss of a loved one. For most of us, losing a spouse or losing a parent or losing anybody might take us a long time to recover from. You don't just bounce back and go back to a career, bounce back to making all that money. You're going to need some time to recover, and you're going to have a lot easier of a time doing that if you're left with a significant amount of money to do so. So to give us a little bit of a summary of this simple video, and I will note there are lots of other types of life insurance policies out there, things like IULs and VULs and other variations of these different policies. We'll save that for another video because those are built for maybe not your typical clientele and they're not always the best option. But when we look at our whole life versus term life, we have this simple comparison. Whole life lasts your whole life, is very expensive, and you give them about as much money as they're willing to give you back in exchange for a tax-free passing of money to your beneficiaries. Term life is built for just a period of time so you can pay just a little bit of money so that in the chance that something were to go wrong and you were to pass away, your spouse, your loved ones, your family is left with a large amount of money, not only to recover, but to live the lifestyle that you built out with your family without your income being involved. One final note, which is a really cool piece, there are some term policies that offer you all the money back that you put into the term policy if you don't pass away in that period of time. That's awesome. This term policy, the biggest qualm with it or the biggest negativity that term policies have are that it's a use it or lose it situation. If you buy a 30-year term policy and you don't pass away in 30 years, you spent all that money and you got nothing out of it except for the protection in case something had happened. Now they offer cash back style policies where if you pay it for 30 years and you don't pass away, they'll give you all the money back. Yes, those are slightly more expensive than the regular term policy that wouldn't give you anything back, but at least it gives you this peace of mind that one, you're protected if you were to pass away, mortgage is paid, kids are taken care of, and two, you get the money back if you don't end up using it. So those are our basics of whole life versus term life. A life insurance policy is something you pay for so that in case you lost your life or passed away, Your loved ones are left with money to recover or to survive without you. Whole life lasting a long time or forever and costing a lot more money. Term life lasting just a period of time and costing a lot less money so you're protected for the time you need it, like the outstanding time that you hold a mortgage or until your kids are over the age of 18. So any further questions that you have, feel free to reach out to us at 848-226-6897. Visit our website, www.njlifeandhealth.com. Click below, like, subscribe, and leave us a comment. Let us know what you think in your experience if you already have life insurance, or if you have any questions, please leave them below and we'll be happy to answer. See you in the next video.